Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, June the 12th, 2026. I apologize. Last week I had what I thought was technology problems, but it turned out I didn't change a credit card for my subscription to GoToWebinar. Anyway, needless to say, let's get to it. Start off with intermarket here. So at the top of the list, Bitcoin bouncing, but that's in the context of what has been a pretty weak period here over the last several months. You can see down on the bottom here, gold and silver just getting absolutely crushed here as kind of, we'll call it risk comes off. But I mean, really, again, assets have been moving all over the place. There's been a lot of volatility for sure, certainly at the individual stock level. You can see it is a down week for the markets themselves. We'll get all into that and more. But you can see here from the S&P 500 perspective, again, remember back to when we looked at the end of March here in terms of when it was a bottom, and I showed the ingredients for a bottom. Well, this pullback that's happened in the last, kind of 2 weeks here looks to like a pullback in an uptrend. May it be something deeper? Of course, it could be, but it doesn't look like that right now. And we'll continue to see what it looks like as we watch time unfold. Rocket Lab, this stock was just recently added overnight to the NASDAQ 100, and this is a strong stock. And in the bottom panel, you can see this is relative to the space sector. And of course, there's a lot of enthusiasm for this because today is the SpaceX IPO. This is big, and again, I think the media has got this a little bit wrong. And again, Walter Deemer here is a well-known market technician, has been pointing out here quite clearly that even though this is a $1.75 trillion IPO, it's not truly that. It's $75 billion is what's being sold. So the bottom line is that this stock is going to start trading today, and this is pretty big news. It'll be interesting to see how it responds. Again, IPOs can be very, very volatile, but there's been a lot of enthusiasm for space and certainly everything to do with that kind of technology. So we will be watching. Here's a couple of the biggest stocks in the world. That'd be NVIDIA and Google. Google on the left, you can see pulling back to that breakout spot from the fall, the highs there, and then we kind of broke out in March and have pulled back right back. You can see NVIDIA, that's the largest stock in the world at 5 trillion, and it didn't hold the line. So you can see the difference there, and just a way to look at stocks and understand supply and demand and support and resistance. And I find this continually very useful. Now, there's been a lot of chatter over the course of the last couple of months about valuations and about the market has gone too far, market is too high. There's people talking about crashes. There's all kinds of things. There always is. At the same time, I think this is an interesting chart. Okay, so this is from Yardini Research, and really what we're talking about is valuation, because unlike it was 25 years ago, there's a lot of earnings that are coming out of these companies here that are producing returns for the stock market, and so this is very, very important when we look at the concept of price earnings ratios. Now, again, you know that I'm not a big value kind of person here. I'm not going to go and say that markets are cheap or expensive, but again, the market trend is always going to dominate for me. But the bottom line is, I think if you stare at this chart and push pause to look a little closer, you'll see here the valuations are not stretched. In fact, the market is far, far cheaper than it was 25 years ago. Technology versus the S&P, I think this is, again, just continually helpful. When we look at the last several years here, you can see the green circles, red circles. That's been a lot of volatility of the outperformance of technology versus the S&P 500. That's a 10-day outperformance. You can see we just had the highest ever. I shouldn't say ever. I should say in the last 16, 17 years there, essentially having a burst of technology outperformance. Now, again, some would say that, oh, that means it's due to come down. Well, no, I would disagree. That's kind of a form of breadth thrust, if you will. And when buying comes into a broad sector like that, that actually tends to portend further buying from my perspective. Let's look at a couple stocks of the InSync pool, just kind of green circles where we kind of last stood in. And again, the bottom line is different sectors are working, right? Technology is certainly strong. Lam Research. Hilton Hotels is certainly outperforming the consumer discretionary sector, which for the most part remains pretty weak. And Eli Lilly has come back very, very nicely here from that earnings last call here. There's been a very favorable reaction. Again, I just want to kind of look at this again. This is what happened, right? Since the Iran was attacked back in the end of February, you can see the returns there, right? So technology up, crude oil up, but look what's down, right? Gold down 21.6%, bonds down, Bitcoin down. TSX underperforming there. That's 1% on the Toronto market, even though there's a lot of commodities. Again, the S&P has outperformed. So bottom line is that when market events happen, when narratives happen, you do not know what is going to happen. You do not know what the market is going to do, and neither do I. I will admit that. Let's look at crypto stocks. Again, I'm not going to show Bitcoin today, but again, we've talked about the fact that it's been relatively weak for sure. The crypto stocks themselves have actually been outperforming quite handily. So this is the corrections of the BitQ, which has been talked about much over the years. Clients had owned this, and actually in the red circle, for the first time in years, we actually walked away. Now, again, there's lots of decisions that go on when looking at where to sell and where to buy for that matter. But the bottom line is this has gone very far over the years. In fact, you can see there from the bottom heading into 2023, up about 728%. And again, there's been a lot of corrections along the way. I've marked all those corrections. They've been pretty deep, right? From 45%, 55%, 47%. But again, bottom line is when you zoom out, there's been an uptrend. And again, volatility is important. There's been a lot of volatility in this particular ETF, and given the magnitude of a lot of things and market context, we actually pushed sell and took some gains that have been banked over the course of the last several years. I want to talk about technology here. There's been a lot of excitement or attempted excitement here by the Canadian government talking about this new AI strategy, creating AI for all and having Canadian values. And I gotta be honest, this just seems like nonsense to some degree, because look at this. I mean, the technology sector in Canada, this is not a country here that we have sort of, again, lots of innovation. We do not have the breadth of exposure to companies that are growing in that kind of regard. We do have a lot going on here, certainly in hometown Waterloo here, but the bottom line is look at technology from a public markets perspective. This is over the course of year to date. You can see US technology stocks are up 27% this year. Canadian technology stocks are down 5.1%. Of course, that's dragged down by Shopify, but that's our biggest company at this point. And so again, is this going to sort of go and are we going to see Canada become a massive threat to US technology and AI companies? I highly doubt it. But anyway, again, some of it is just political theater, and we will continue to see. But the bottom line is Canada is in a recession that has been announced. Of course, they're calling it a technical recession, which, to me just means that it meets the definition of a recession. So it is one. But again, the media is pretty good at trying to go and spin things to sort of not cause concern. But I just want to point out that stock markets can rise in the face of bad news. And you can see my Canada chart here. I've shown it before. You can look at all the kind of news headlines and various things that are going on. And the market has continued to rise. Asset prices rise. Liquidity has continued to be created, money supply has continued to be advanced, inflation has continued to grow, and stocks are an inflationary asset. Let's finish off with Sector Watch. You can see there's the defensive bounce there. Consumer staples up at the top of the list, really kind of getting some bids here as the stocks have come off here in the technology space and the correction that we talked about. Gold stocks down on the bottom of the list, taking the brunt of it. Just to kind of check in here on our OnSync portfolio. This data is to the end of May, just kind of showing what we're up to here. This is our pooled fund for Canadian resident clients. Things have been really good. Things have been going well. And again, certainly wanting to capitalize on the markets, whether it is in, south of the border or north of the border. Certainly technology has been an important component of what has been going on here. But again, if you'd like more information, please don't hesitate to contact us. Lastly, I'll be on the morning show with friends JC Peretz and Steve Straza on Monday morning. So you can tune in. Again, you can be found on YouTube and around, but I look forward to chatting with those guys always. It's fun. So please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.